Hey, Gabrielle, Greg here. This old stuff from the 90s, it was okay back then. Markets have evolved so much since then. And so this from my old company was from the old TPM1, which was a starter course, most definitely incomplete. And a lot of these examples were created by my prior partner that took stuff in a moment in time and taught it as if it was historically valid forever. Yes, bars go down and they turn above a prior bar's high and turn up again, but they just, not even that they did that consistently, turn and not wiggle. But in today's market with the algorithms that are trading, they know where stops are. The wiggles sometimes are considerable. And so when you ask to apply this to CBRL, it just doesn't work. And you want it to give you an entry point, and you want it to be so exact. And this pattern being what it is, I explained in a prior video, the topping tail rejection, the sloppiness of how it traded, the angle at which it came down. It just wasn't going to operate the way you're assuming this would in such a fluid manner. So you are dealing with something, let's just call this a giraffe and this is a rhinoceros. It's just two different animals for what you're trying to apply to Cracker Barrel here. It's a bottoming stock. Look at how the moving averages are starting to come together. It's tightening up. So it came down in an abrupt way after this failure. And so you're assuming that something's going to operate like this, trading over a prior red bar's high. Well, you could trade it that way, but look at how this example is. It opens up slightly higher, and then it takes it out. And now if you think this is just going to close green, because this slide shows it that way, that's an assumption that it's going to close green. You don't know it's going to close green until the end of the day. Okay? And then you're going to put a stop under this bar's low. You're going to get chopped to death. Anyway, if you wanted to trade Cracker Barrel, but just you wanted to trade over a red bar's high, the way this setup was actually superior. Why? Because it went down first. It gapped lower, it went down, and then traveled up. So for a swing trade, look, what's going on and how fast it goes up is kind of an unknown. But if you want to enter 5 to 10 cents above the red bar's high, just put your stop in, your buy stop. Put the buy stop in and let it trigger. Now, where are you going to put your stop? This bar's not done yet. So you have to pick some point that you believe it won't go down. And this is a difficult chart to do that with. First of all, this green bar isn't complete. So support is down here. You could arbitrarily say below the 50, all right, if it triggers above there and say below the 50, but that's not based on any significant price support. So it's not the easiest setup or the best setup to do this. But what was certainly better with this setup is that it went down first. It hit the 50 and sprung back up. Now, you're saying you just want to put a buy stop in. Maybe you're working, you can't watch it, you want to put your buy stop in and just let it trigger that. Well, that's fine. So now you have to come up with some criteria other than this to where you're going to put your stop. Money management is the key. Share sizing and money management is the key. Not the way it's explained here. Okay? Once this bar completes itself and you've got a bullish wide range bar, you now have some objective information that says it shouldn't trade below here. Now, if you wanted to wait for it to trade above this bar's high, the green bar, once it's complete, and put a stop down here, that's okay, but this is a rather sloppy pattern. So, again, position and money management allows you to put on a starter position, share sizing accordingly, like a third or a half, maybe share sizing it down here, and you're going to allow and figure there's probably going to be some kind of wiggles because of the erratic price action that's going on here. I'll mention again the rejection and the way it came down, so you understand what's happening based on the price action. And the chart you showed me with the indicators on it, get rid of them. I never taught you to put any indicators on a chart. So you, after all these years, are listening to the indicator-based methodology that it is a black hole. Take them off and start understanding price action. Understanding price action was never in TPM1 to the extent that I taught it. So what's going on now? It's starting to get tighter. Look at the distance between the pivots here. Pivot highs, pivot lows. These are bars with 3 lower highs to the left, bars with 3 higher lows to the right. So opposing pivots mean uncertainty. Power move up. It's often the case that it has a strong move down. So now it's tightening up some more. I'm not sure this is just ready yet, but the fact that it's starting to tighten up, and you could look at the weekly time frame, which I did, and it doesn't look so great. But this could be something that is in development mode. It's not a stock that's in a strong uptrend where it's pulling back to an area of minor support, maybe a rising 20 MA. Look, the 200 MA is declining and it's flattening out, which means the monthly has been in a downtrend. And the weekly and the daily have starting to come up. This is a bottoming stock. I don't even need to look to the left to know it's a bottoming stock. I just look at those moving averages, those visual aids. But it's improving. You're looking through the eyes of something that was created in the middle 90s and a little after that, and trying to apply this to a market environment 25 years later where algorithms are the norm and wiggles are the norm. You need to learn information and price action that works in current market environments. It worked in the past when you applied bar by bar analysis, which I taught, and understanding pivots, support, resistance, and trends. But this stuff was always the beginning of understanding basics. So take the indicators off your chart. I offered you to spend time in the green room with Dan and I at no cost to ask questions. You're welcome to do that if you're available during the trading day. Become a member. You can attend the coaching sessions where you could ask questions. See, the thing is to have access to someone that you can ask questions to. And I'm answering your emails and offering you this video, which is great in my opinion, to explain things like this, but to have access to mentors like Dan and I on a day-to-day basis in the green room to see trades and how they're managed and ask questions is invaluable. So all the best. I'm happy to see you're still, plugging away after many, many years, and you reached out to me, and I'm here to help as a past student. And, think about what I'm saying here and take me up on my offer. All the best and happy holidays.